Good morning, everyone. Welcome to Daily Rates Live with the Mortgage Calculator. Today, we are going to be talking about HELOAN. So, second mortgages here today, we're going to be talking about. Give us just a minute here to go live on all the different platforms, and we will get started here. We got the chat up on the screen. Feel free to drop a comment in there. I see comments already coming in. Definitely appreciate it. And we will get started here shortly. Hope everybody had a great weekend and is ready to get back into it this week. So it looks like we're live on all the platforms. We'll go ahead and get it started. What we'll do is we'll take the chat off the screen for now, but go ahead and keep dropping comments there in the chat. And you can also drop any questions you have in the chat as we go through the presentation here today. So welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our CSO, Jose Gonzalez. We are a lender that specializes in non-QM loans. And what we do every morning at 11 a.m. Eastern on this show is go through our actual live mortgage rates. Then we do a deep dive into a different loan type. And today we're going to be talking about HELOAN. So Jose will take us through some examples here shortly. But first, we'll do what we do every morning, which is pull up the live rates. So Nick, if you're ready, let's go ahead and see what the rates are looking like this morning.
All right. So rates are looking good. We will check out our initial rate sheets for today. It is August 19th, just after 11 a.m. Eastern. So all of our initial rate sheets are live for the standard programs. We will set up a simple scenario to compare across the programs here. If you'd like a itemized loan estimate that itemizes all the fees that go into the APR, please get with our team members. They would be happy to help you out. For the basic scenario that we'll compare, we'll set up a standard single-family home, set up a $500,000 purchase price, $400,000 loan amount. That corresponds to 80% loan to value, 20% down payment. And we'll set an estimated 760 credit score and an estimated 40% debt to income ratio. So with those settings, let me go ahead and share my screen. And first up, as always, is our 30-year fixed conventional for a primary home. Typically the most common option people think of when they think of a mortgage. Rates today come in at 6% flat. Final APR 6.324. Definitely going down. We love to see the rates going down, and many more customers qualify now that may have not before. So great options here. Now, if for any reason our customer doesn't qualify for conventional, the next option we typically want to present is an FHA option, which allows more leniency on credit issues, as well as a higher overall debt to income ratio. However, it does require upfront and yearly mortgage insurance. FHA comes in today at 5.25, and a final APR with mortgage insurance and all the costs, 6.169. So if our customer qualifies for both, FHA could be a touch cheaper in this example, but they do have to be willing to do that upfront and yearly mortgage insurance. And our customers that need to use it, definitely very welcome, as the price is pretty great today. And for our eligible vets and active service members, our VA programs are great options. Rates as low as 5.375, and a final APR with a standard funding fee 5.682. So notice if our customer qualifies for a VA program, it's going to be preferable to any of the other standard options. So definitely a good option for our vets and service members. Now, USDA is the last government standard option here. So USDA is only for properties in the rural areas of the country, the USDA eligible areas. If the property is eligible and the customer is eligible, these are good options. USDA coming in today, 5.25, and final APR with standard fees here, 5.996. So notice if our customer is shopping in those USDA areas and comparing to an FHA, the USDA is a touch cheaper here as usual. And it's cheaper than the conventional as well. So if the property is eligible and the customer is eligible, USDA is a great option. And that rounds out our standard options that any bank or lender has. If our customer doesn't qualify, many other companies will have to deny them. But that's where we love to present our 5,000 other options, starting with our non-QM alt doc option. So customer doesn't qualify for conventional with 2 years of tax returns, needs to use alternative docs. We switch over here to this program. We can use alt docs such as 1099s, bank statements, P&L statements, all kinds of different options. Rates today for a standard bank statement option coming in at 6.625, final APR 6.939, and we're within about 0.6 today, usually within about 0.5 of a conventional option to use alt docs. So great option for our customers that need to use it. Not very much more cost there for our customers, and they can qualify for that home they still really want. And next up is our non-QM alt doc for investments. So tons of options for investment properties once we go outside the standard. First up is our non-QM bank statement and similar, 6.999 rates today. Final APR, 7.429 with all of the fees included there. And we'll compare that to other investment property options. So there are no government options, so no USDA, FHA, or VA, but we do have our conventional. And for an investment property, conventional comes in today, 6.75 rate. Final APR 7.095. So it's beating the bank statement option, but we definitely recommend all of our customers check out our favorite loans, our DSCR programs. DSCR stands for debt service coverage ratio. No employment needed, no income needed. We simply use the estimated rents from the appraisal to determine a DSCR ratio. The estimated rents can cover the expenses, aka the property cash flows monthly. That's a ratio of 1 or higher, which is preferred. We set the ratio for all the demos here to 1.5 so we can see all the programs. First up, our 3-year prepayment penalty option, rates as low as 6.75. Final APR 7.054 there. So a touch cheaper than conventional, and we can sweeten the deal with a 5-year prepay. Rates come down to 6.5. Final APR 6.836. Again, beating conventional. Pretty amazing to have a DSCR loan beat conventional pricing. And the final DSCR option, no prepayment penalties, and some states do not allow it, and some customers don't want it. Not a problem. Rates today coming in at 7.125. Final APR 7.466. So with no prepayment, it is a touch more expensive than a conventional option. But again, no documents, no income needed, so a lot better program for most investors. So most investors would still prefer a DSCR, even if the cost is substantially higher. And final 2 options today, won't waste much time on these since Jose is doing a deep dive example, are 30-year fixed second mortgages, aka HELOANs, for a primary home. So many customers have a first mortgage that they have a low rate on and may not want to touch. So we can get cash out still by not touching the first mortgage, getting a second mortgage with a fixed rate second mortgage on a primary home, rates as low as 8.5, final APR 8.930. And these are non-QM programs, so we can use bank statements and similar. And switching over here to our investors, investment properties, same thing. We can get a second mortgage to get that cash out if you don't want to touch the first. Rates as low as 10 flat, final APR 10.221. But Jose will get a little more flexible with different options and combinations on these cool new products. So let me switch into our mode for today. So again, HELOANs is kind of a new product. These are non-QM, so we can do full doc, obviously, but also bank statements and similar. So I'm sure Jose has a little bit of both. Lots of flexibility here. Again, these are for our customers that have a first mortgage that they don't want to touch as an alternative to a HELOC. So first, Jose explained the difference between HELOC and HELOAN, and then let's check out some more detailed examples.
Good morning, everybody. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator. First, let's go over the differences between the 2 products. The HELOC is an open-ended loan, and basically you pay interest on what you owe. As you bring the balance down, the interest expense drops. It is not a fixed amortization table. The HELOAN, on the other hand, is a closed-ended product, and it does have a fixed amortization. Whatever you close on it, the most common is 30-year amortization, and it does generally have a lower payment than the HELOC. However, since it is a fixed amortization, even if you bring the balance down, the payment amount will stay the same. However, many of our borrowers are choosing the HELOAN because it's a fixed rate option, it's a lower payment, and it does allow, main reason is that it does allow multiple income types, right? So we have full doc using traditional tax returns, W-2s, pay stubs, and we have bank statement option, profit and loss option, a 1099 option, and we even have a DSCR option, which is very interesting. Remember, the benefit of these programs is that you do not have to touch your first mortgage, which may be at a nice low rate. You just use a second mortgage, and then if they want to know their actual out of pocket or the actual cost, you can always analyze the blended rate to let the borrower know what is the actual interest that they're paying when you combine the first mortgage with the new HELOAN. So let me go ahead and let me share the options that I have for you today. Our first option is a full doc option. This one happens to be primary, and 10.875 is our lowest cost option at par, and you can buy that down all the way to 9.875. Second option is our bank statement option. Our lowest cost option is 11%. So you do see, compared to the full doc option, uh, you do have a little bit higher rate. Plus, most importantly, once you go bank statement, the LTV does drop. In this case, the bank statement option for primary is max 85%. So 11% lowest cost option, 9.875 lowest rate option. And now it gets better. Our profit and loss, also known as P&L, profit and loss report, cash out refi, HELOAN, primary residence. 11% lowest cost option at a cost of a quarter point, and you can buy that down to 10% at a cost of 2.375 points. Now our 1099 option. Now, you all know 1099s are a little bit different than bank statements. In most cases, 1099s do allow us to use up to 90% of the income listed on the 1099 for the loan application to qualify the borrower. And again, 11% is our lowest cost option at par. And in this case, you can buy it down all the way to 9.875. And our last two options, left the best for last, the DSCR HELOAN cash out. Now, this is an investment only product, as you know, for all of our DSCRs are always investment only. And also a maximum 70%, 70% CLTV. So they do lower the CLTV a little bit when you're going DSCR. 11.75 is our lowest cost option, and you can buy that down to 11.5%, excuse me. And this is for our 70% CLTV option. And then our last option here is just giving you a little difference in pricing at 65% CLTV, 11.75 again, our lowest cost option at a cost of 2.6 points. And you can buy that down all the way to 11.125 at a cost of 3.35 points. So definitely look to the mortgage calculator for all of your HELOANs, second mortgages, and all other non-QM and agency options.
All right. Thank you, Jose. Great options there. I don't see any questions, so I think we'll go ahead and wrap it up here. Remember that we do this at 11 a.m. Eastern every weekday, where we go through our live mortgage rates and then do a deep dive into a different topic. So we will see you all tomorrow with a new topic at 11 a.m. Eastern for the next episode of Daily Mortgage Rates Live with the Mortgage Calculator.